Hey there, folks. Coming at you with this week's market wrap. Yes, it's a little bit late, but things come up in people's lives, and sometimes you don't get to do exactly what you want to do when you want to do it. So, better late than never, I say. So, here we come with today's market wrap. I'll be back tomorrow morning with stocks to watch for next week. Actually, just got done going through and putting together a little list here of stocks to watch for next week, and I can tell you this. There are a lot of good looking setups out there, I have to tell you, and it is a sign of what the markets are doing. I mean, we are grinding higher. Bulls are in control. I think that the Trump rally has definitely been extremely impressive, and it looks as though it actually wants to continue. I mean, we are coming up into Santa Claus rally. This is a good time typically for the markets this time of year. So I really do kind of feel as though we're going to continue to grind higher. You've got hedge funds, money managers that were positioned wrong, and need to chase the market a bit to make their portfolios look better. So that's my position: is that we are going to continue to grind higher into the end of the year. We may see lighter volume trading. And then, right before the end of the year, you're going to see some tax loss selling. So, some of the dogs that are getting dead cat bounces and so forth and so on, you could see a pullback in those as people are taking losses. So, NASDAQ grinding higher, well within the Bollinger Band, took out a level of price resistance and looks as though we're going to continue to do so. I do believe we have a pretty good chunk of economic news coming out next week, so that could be interesting. We'll see how that plays. We've got OPEC, which is supposed to meet on the 30th and come up with a decision. You just had Saudi Arabia say they're not going to be there. So, we're getting some mixed signals on the whole OPEC thing. We'll see how that plays out and how that impacts oil. Let's take a look at the IWM, IBB. IBB actually broke down a little bit talking to the folks over at Alpha Wolf Trading Pro members in this week, and we were watching this kind of pennant formation, and we broke down below it, broke below the lower level here. It looked like as though we may go down and fill this gap, and then we actually wound up bouncing back at the end of the week there. We'll see how this plays out next week. But this could have just been a little shakeout here. Came down, kissed the 200-day moving average, and then bounced right back up. So we'll see if we can take out this trend line and this longer term trend line right here next week in the IBB. Maybe go up and do a 300 test, or maybe take 300 out. But IBB actually, had a nice little recovery towards the end of the week there. IWM. I know that there are a lot of people that are speculating that this is a short squeeze within the small cap space. But this is just grinding higher. This is not some kind of a parabolic move. It's just grinding higher after taking out, what is that, all-time highs or new 52-week high? No, all-time highs after taking out all-time highs. So it's not parabolic. It's not as though it's run way too far too fast. Look, there are a lot of overbought conditions out there. Wouldn't be a big shock if we were to consolidate a little bit, even drift back a little bit on some light volume, which would be healthy, right? I mean, we've had a very big move. We do have these gaps on the daily that could fill, and at some point they probably will fill. I just don't know that it's going to happen, within the next couple of weeks, right? Unless we get something really dramatic that happens that makes the market sell off. I think potentially maybe we do pull back, we drift back on lower volume and maybe fill this gap here. See if this area can hold as price support. in this, somewhere in this area, 127 to 129, somewhere in that area. But really, it's just grinding higher. So bulls appear to be in control, and I think that it likely will remain that way. IYT transportation, looks very similar to the IWM. Actually, many of these charts, sectors, and indexes look very similar, right? We've had a nice run, we're consolidating, and then some of them are just grinding higher each day. Not getting that big parabolic move, but we are grinding higher. So one of the things that we focus on over at Alpha Wolf Trading is the strength of the dollar, right? Because strength of the dollar has played a role in gold pulling back and the miners. And, at some point, if the dollar continues to strengthen the way that it has, it will have an impact on the multinationals and some of those big cap companies, just because of foreign exchange, right? Foreign exchange rate. So the dollar has been incredibly strong, and would actually like to see it pull back a bit, because I think if it goes on too much of a rip roaring rally, it's going to eventually, I think, will impact the market. So pierce the upper Bollinger Band. We do have a gap on the daily to fill down here. It actually probably would be good if we were to pull back and fill that gap. I think if that happened, there are a lot of people speculating that gold and silver and the miners are due for a bounce. I just read a thing and posted it to the room on Friday. I think it was either Friday or maybe it was Thursday, that Elliott Wave Theory guy was talking about how gold is near a bottom and time to buy. And I will be honest with you, gold actually doesn't look like it's bottoming to me. Actually, gold looks like it just broke out of a bear flag and wants to head lower. It's well within the Bollinger Band. It's not, hasn't gotten completely out of the Bollinger Band as a parabolic drop, right? So it's not really set for any kind of a big snapback play. And as I'm looking at, we are an area of potential price support right here at around 112. You can see back here that it acted as support, acting as support. But if that support breaks down, where is our next level of potential support? We are below the 200-day moving average. We just had the 50 and a 100 EMA cross to the downside, and then we just crossed the 200-day. So this could be, I think some people could say that's, what do they call it, the death cross, right? That could be the death cross. I don't know that is going to be the case, but where could this really fall to if it breaks below 112 with some real conviction? I think potentially, let's back this out to the weekly, and let's just look at this long-term dominant trend line, right? This has been in a uptrend for a while. Let me go back to the monthly here. There we go. All right, so we've had a long-term dominant trend, right, going to the upside. And then we started a more of a downtrend back here in 2011, right? Then we started another little uptrend, right? We broke that trend line. We started a little move higher. And now we've broken this trend line here. So it almost would make sense in my mind that we would come down and potentially test this trend line, right? And that trend line is going to put us somewhere around about 105 bucks. Then you could find some long-term potential trend line support. You find some price support in that area, 105.50, 105, right? And maybe we're piercing the lower Bollinger Band by that point, and we're set up for some kind of a snapback play. That's kind of what I'm looking at with gold. I think 112 is a pretty important area. If we break below that, I think it's going to be problematic for the miners and problematic for gold. This GDX to me looks like a bear flag, or GDXJ, GDX, same thing. We can take a look at JNUG. Looks like a bear flag to me. And we could look at Nuggets, and it's the same thing, right? So JDST, JDust, and Dust, I do believe that those could be breaking out. They just broke this little trend line here. They pierced the upper Bollinger Band, worked their way back in, consolidating. Just broke this little tiny trend line. Could be going back up to test that area around $47 or so. If it could take out 47 bucks, I mean, this thing can rip. This thing can rip. If gold really does break down and the miners break down, J-Dust can really rip. So it's worth having on your radar. And then let's just take a look at Dust real quick. Listen, a lot of people, or some people, like to anticipate the turn, right? Oh, the selling's way overdone. I don't think you really need to try to anticipate the turn in this. When the turn happens in gold and JNUG, you'll know. And you won't have just one day to trade it. You'll have plenty of time to get involved if gold and the miners start to rip again. It won't be just a one-day event. So you don't have to try and catch a falling knife, I don't think, right now, because the patterns just do not look very promising for gold on the long side or miners. All right, so Dust is another one that you can keep an eye on. It's actually flirting with this 100 EMA. If it could take that out, there is a gap to fill on the daily up to about where the 200-day moving average is, right around $78. That could happen, right? I mean, if gold really does break down below 112, then I think maybe Dust gets a pretty good rip. So keep an eye on Dust and J-Dust. Let's take a look at some of the other stuff that's going on in the market here. Labu, right? Labu actually looks just like the IBB, triple levered. Right, so if this takes out this trend line with some conviction, maybe we get a nice little pop in Labu from 45. The next area of potential price resistance is up here around 55 bucks, and it's where we had this we were consolidating in this area and then gave it up, and maybe now we go back up and test that area. We do have a gap to fill below on the daily, but nice recovery in the last couple of days in Labu. If you don't have anything specific that you want to trade in the IBB, let's take a look at the SMH. It has been one of the strongest sectors out there. It's been the SMH, right? New highs, just pierced the upper Bollinger Band and working its way back in, right? Nice tight consolidation. Maybe we consolidate a bit before we make another move higher. Might need a little more time here, but really SMH has been a strong sector, and actually on my stocks to watch list for next week, I've got a couple of semiconductor names that also have nice looking charts. So you got a strong sector, you got a couple of stocks that have nice looking charts. Hopefully if that strength continues, it takes those stocks with it. S&P 500 closed right at the high of the day on Friday. Look, descending volume as we grind higher. So there's not a tremendous amount of conviction in this move, right? And I think a lot of people feel as though the market is overvalued, the Trump rally is overdone, and that could be, but there is nothing right now that should give you any reason to try and be bearish. There's just nothing showing that, right? We've got a lot of strength out there, and I think that you play what's happening, you play what you see, not what you think and what you feel, right? You may feel as though things are overvalued and just can't go any further, but you know what? It doesn't always have to be the case. If you think about where we've been for the last couple of years, where were we, right? We were sideways. We were consolidating. We were, we had a couple of pullbacks, but then we consolidated. We went nowhere for a while, and we're breaking out of that. We are breaking out of that range that we've been trading in for a couple of years. So I don't think that this is just going to be a real quick deal. I think we've broken out, and I think we're going to continue to break out and defy, what everybody thought was going to happen. And look, when we start raising rates and we start hearing about how many rate hikes the Fed wants to do after December, that could change the whole. That could change everything. That could change the dynamics of everything. We could start selling off again, just like we did last year. But this right now, I think it's really tough to want to be a bear. That's just my personal opinion here. But things can change very, very quickly. Let's take a look at T2107, T2106, or T2108. So this is a percentage of stocks above the 200-day moving average. When you get up into the 70 area, that is where you start to say, okay, this is, and that's not to say it can't go higher. It can go higher. It can get up into the 80s and 90s, right? T2107 and T2108 can get up in the 80s and 90s. But when you get into the 70 area, that's when you're supposed to be locking in some gains, and maybe, if you're looking to go short, maybe go short. And we're not quite there yet. We are approaching that area. We're not quite there yet. When you get down at below 20 into the single digits, then that's the time when you're supposed to, take out the second mortgage and load up on stocks. But actually looking okay there. Same thing with the T2108, get up into the 70 area. That is the time to start locking in some profits. And interestingly enough, we're getting real close. We're within a couple of points. But if you can see back here, T2108, this is the amount of stocks above the 40-day moving average. It can stay up in the 80s for quite a while, right? Look at what we did back here in February. I mean, it was just bumping up against this 87 mark for quite a while, and then actually we did wind up breaking down a little bit, coming up into this trend line here. Maybe we find some resistance, consolidate before we move higher. But this is kind of signaling that we are getting closer to an area where you might want to start locking in some profits and maybe building cash. But like I said, this can get up into the 80s, so we're getting close on that, but we're not quite there yet. All right, let's take a look at volatility. As you can imagine, there is none. There is no fear in the marketplace. You have nobody panic selling, so we just don't have a lot of volatility out there. And I just don't, I really don't see how we will get that before the end of the year, unless something tragic happens, right? But there is no volatility. VIX. But I will say this: when we get down into these low levels, that's when people start to get a bit nervous because there's so much complacency out here, and that's when the market can throw a little curveball your way and try to scare some people. So I'm not suggesting, I think I maybe should clarify because I am sounding pretty uber bullish here. Listen, anything can happen, anything can change. Right now, the charts are what I'm seeing in the charts is that the market looks pretty darn strong. There are a lot of strong looking sectors out there, and we haven't gone parabolic straight up. We're grinding our way higher after trading in a range in the markets for basically 2 years, and we're breaking out of that range. So I do think from a technical standpoint that we're looking pretty bullish. However, anything can happen. I mean, as the administrative cabinet gets put together from Trump, maybe some really terrible things happen. Who knows? I mean, who knows what could happen? But things can change on a dime, and I recognize that. You should recognize that too. So you don't want to get too complacent, too comfortable. And if you have profits, and you've got a stock. Look, these particular charts don't look really extended, but if you've got some charts on some stocks that have had one heck of a nice parabolic little run, if you're not locking profits, then I think you're probably making a big mistake. All right, aerospace and defense grinding higher. got completely out of the Bollinger Band, worked its way back in, consolidated, and now grinding its way higher. We do have some gaps on the daily that I think probably at some point are going to fill. But for right now, it still looks like aerospace defense wants to move higher. Home builders grinding their way higher, which I got to tell you, I got this trade. I got this trade pretty much. I didn't get it wrong, but I suggested that we stay away from home builders into the holiday season, and that was working out for quite a while. And it did look as though it just wanted to continue to go lower, but then it has had a really nice bounce. And one of my favorite stocks that I was planning to get involved in, it actually hit my area that I wanted to start looking to get involved for a swinger long-term hold. It hit this area and I did not take it, and this is what happens, right? I mean, I didn't take it, and that sucker went on a nice, basically $4 run, and almost looks like it wants to continue going, maybe go up and test somewhere in the $15 area. But home builders looking pretty darn good. Let's see what else we've got going on here. Sector materials coming up into it. Actually did break over this and close over this, grinding higher, right? Had a nice move, flagged out, and then had a nice little pennant, and boom, exploded higher. Just took out 49.50. $50 is probably going to be the next area of potential significant resistance. We'll see how it acts at $50. Right, we've got resistance there, acted as a little bit of support here, resistance here. So we'll see how it acts in this $50 area. If it takes out 50, maybe it's going to go up and test. Let's see if those are all-time highs or just the 52-week highs. All-time highs. So we're looking at material sector, maybe going up and testing all-time highs here. So that's kind of interesting, maybe worth keeping an eye on. XLE consolidating after piercing the upper Bollinger Band and breaking over this key level of price resistance at $72. Was actually an area that we kept tapping into, and now we have broken above it and consolidating. So, build another base before maybe making your next move higher. We didn't look at oil. We will, actually I'll go look at that right now. So we had a little, it's a little bouncy, right? Had a little gap here to fill on the daily. I think this is off of OPEC news. It's acting pretty choppy. You get a positive piece of PR, and then boom, it gaps, and then it holds over the 200-day. Then you got a negative piece of PR, and you pull back, you fill the gap. So as we get closer to the end result on Thursday, I think we'll hear more rumors, probably get a little more bouncing back and forth. But what was interesting about this is oil pulled back on Friday, closed nearly at the low of the day, but XLE really didn't have that kind of range, right? Just consolidating, kind of an indecision day right there. We'll see. I mean, if oil does wind up pulling back significantly, XLE, of course, is going to follow. So you have to pay attention to what's going on with oil before you go taking trades in energy names. XLF, look, I mean, this thing is really consolidating, very tight candles. You can look at the XLF, you can look at FAS or FAZ. Boom, where's FAS? There, FAS is 3-time bull. FAZ is 3-time bear. And if I were you, I probably wouldn't be looking to play FAZ. Unless you see a real breakdown in financials, and I just don't think that's going to happen. I think, financials have been a sector that have been undervalued for quite some time. This is looking really strong. I think it's a very strong sector. I really don't think you want to try betting against financials here. It still looks very bullish for them. So, all right, let's take a look at what else is happening. Industrials, Caterpillar had a big pop, And I mean, this is a really bullish looking setup. I mean, is it extended? It could be getting extended. You know, do we have to have a dramatic sell off? I don't think that we do. We could pull back a little bit, maybe test the 8 EMA, maybe come back down and fill this gap down here, right, on the daily, but still looking pretty darn good for industrials. Technology, just basically. So utilities had a little bit of a bounce yesterday, and actually I do have a utility on my list of stocks to watch for tomorrow. But been beaten up. I'm not really super crazy about the technical setup. It actually looks like it's kind of putting in a bear flag there. But did have a little bit of a bounce on Friday. XLV, healthcare, you know, actually looked like, actually it did. It filled this gap. And then it had a nice little recovery towards the end of the week. It's kind of just like the IBB. We'll see if it takes out this trend line next week or if it continues to drift lower. But healthcare, actually, you know, there are some names in the healthcare sector. BMY, and that will be on my list of stocks to watch for tomorrow. But has a really sweet looking setup on the daily. Nice tight consolidation. But I think healthcare has been beaten up probably a bit too long, and is a sector that I think is due for recovery, but we'll see what happens. Consumer discretionary, unbelievable little run in consumer discretionary. A lot of strength in this thing. So you know we're watching to see if we, you know, how the stock would or how the ETF would react in this at this level of $80. Because it had been coming up and testing that for quite a while, and then it failed, and it came back up, tested again, and popped right through. And really, what I was hoping we would see was that it would consolidate here a little bit, just over 80, and then build the base, and you know, then take a move higher, maybe go test this 82, because that was an area of resistance prior. Man, this thing, you know, it flagged for like a day, and then just busted right through, right? $83, and I think that's all-time highs for consumer discretionary. So pretty impressive little move there. I'm not going to say that this isn't getting a little extended. And the other thing I would say is that it's making those highs. Now this is the weekly time frame, but it's making these highs not on a lot of conviction, right, when it comes to volume. I mean, each one of these is a week, but it's descending volume. So you're moving higher on descending volume. So there's not a tremendous amount of conviction there. So I would be a little bit careful, cautious in the consumer discretionary space. Metals and mining, you know, getting a nice little pop because of copper and coal and some of the other plays, not the precious metal plays. So. Getting some nice action there. Took out $30. Well within the Bollinger Band. Hasn't gone parabolic, but could take a breather. Wouldn't be a bad thing to take a breather and consolidate a little bit. Oil and exploration consolidating just underneath the $40 mark. I think 40, if we take it out with some conviction, that's a big spot. Retail. So retail, listen, we're going to get, you know, Black Friday numbers and then Cyber Monday numbers, and we're going to get all kinds of retail numbers next week that could impact this sector. I know I did a little bit of shopping myself this week, so we'll see how those numbers come in. But retail did take a little bit of a pause on Friday. We'll see how it plays out next week and what kind of numbers we get. So, you know, we've got some economic data coming out next week that could impact the markets. We've got a few earnings coming out next week that could be interesting to watch. We've got OPEC and some other things that could impact the markets. But from a technical standpoint, we are grinding higher. We are breaking out of a range that we've been trading in for a couple of years. And I really still think that the bulls are in control and likely going to stay that way through the end of the year. But like I said, anything can happen. So Keep an open mind. Don't chase. Okay, do not chase. The hot thing lately has been these low floaters, garbage stocks that are going on these rip roaring runs, and those can be fun, but they're not fun if you chase them. So and you chase them and get in them right at the wrong time. So be careful, be smart, be patient. And that's it. Good luck trading next week. Look, if you like what I do here, come check us out over at alphawolftrading.com. Currently, we have a free chat room, but that may be changing in the near future. Haven't really decided yet, but I've had some discussions with some of my pro members, and I've had some people that have, kind of taken advantage of the fact that I have a free chat room and not in a good way. So I am contemplating whether or not that free chat room will stay free. And I guess that's pretty much it. I'll be doing Ticker TV stocks to watch tomorrow, 8 a.m. Vegas time. Come on by. Join us. If you've got any stocks you'd like me to take a look at, send them to me at tim@alphawolftrading.com, and I will be happy to put them on my list. And that's it. I hope you have a fantastic weekend. Be safe, have fun, and I will see you all next week.